Tip number 1. Use supply and demand fails as much as you use supply and demand retests. Here we can see a market that is clearly down, making lower lows and lower highs. If we look at this area up here, we can see that this is totally efficient. And what I mean by that is every single supply zone that has formed has been retested by price. That means that if we were to break up into that range over this lower high in the market, there'd be no reason for the market to stop up here. So a break of this structure or a failure of this supply zone would actually lead us into bullish territory and therefore give us buying trades. So supply and demand fails, meaning areas in the market where supply and demand zones have failed to hold price, are just as valuable as actual supply and demand retests. Seeing a failure of this supply therefore indicates that we are likely to continue moving to the upside. And what that means is we can now use supply and demand retests to trade price in the direction of the failed supply and demand zones. Here we have a failed supply, and here we have a demand which corresponds with that direction. So we would look to buy from this area and continue the market upward. Tip number 2. Put weight on the zone that broke structure. In this example on EURUSD, we have a market that is clearly trending to the upside. Now at this point, we've had a break of structure over this level here, and now we have had a break of structure, albeit a minor one, over the very high. Notice the supply fail also for this trade, which we mentioned in tip number 1. Now what you can see is we have a few zones to select for our buys. Now first of all, we could look for this zone here, but we do have this little bit of liquidity beneath with these two near equal lows. Below that, we have another demand zone, which comes in around this area. And then below that, we have an imbalance, this imbalance here, which leads us towards this area, which could be considered another demand zone. So which one would we pick in this instance? Well, for a high probability buy, I would use this one. And the reason being is because we have this liquidity to fill. So we definitely don't want to be buying at this one with the liquidity below. But I don't expect price to come all the way back here, because this is the zone that broke the structure here. So if we look at the substructure within this larger move, we can see that this is the last meaningful lower high. From there, we had this impulse upwards, then we reaccumulated here, formed a consolidation, and then we had a drive up which broke the structure from this point. Therefore, if I wanted to buy, I would use this zone over this zone any day of the week. But why would I do that? Well, the reason that I like to use this zone that broke structure more than extreme zones in instances like this is because I like to read into the candles. And by seeing this reaccumulation here before the breakout, what I'm seeing is a new bout of buyers, a collection of buy orders which have actually given true volume to the market. Even though the area down here formed a big impulse upwards, it didn't form enough of an impulse to actually break through the previous structure. So until we had this reaccumulation and push from there wasn't really enough strength to break the market. Therefore, the zone that broke structure is the area of true volume, and as such, the area that I want to buy from. Tip number 3. Use supply and demand zones as a catalyst to get into trades, not as a sole reason behind a trade. In this example trade here that a lot of my members took, you'll see that we have a demand zone just here. I would never just buy from this demand zone alone with no other context to the trade. If you buy from every demand zone and sell from every supply zone, you are going to get badly burned. It's when we build a picture around the market that this demand zone becomes a good catalyst to enter the trade. Now that we've zoomed out and really broken down the market, it becomes clear that this demand zone actually would be a good place to buy. We can see the trend starting to shift from down to up with this break of structure and supply fail here. Then we've seen a pullback down and a retest into this zone, forming an efficiency. Then we've pushed up, we had a supply fail here. We've traded back down, formed a floor of liquidity, pushed up and formed another supply fail within this substructure. So now we could expect the market to come down, liquidate that liquidity floor, and then push up towards this imbalanced open supply zone following this new structural trend. So using supply and demand zones simply as catalysts to enter and exit trades and not as the sole basis behind a trade is going to give you many more wins and many less losses. Those are my 3 tips for effectively using supply and demand zones to make more money in your trades. If you've enjoyed this training video, I have a free 1-hour training that you can watch right now, which is going to show you how to turn your trading results from negative to positive. So if you want to check that out, it's in the link in the description. I'm also running the biggest sale yet on my trading academy. So if you want to learn everything I know, head over to the second link in the description and you can join me and my team on your path to success. Thank you for watching. Please drop a like and subscribe, and I'll see you in the next video. If you enjoyed that video, go and check out this one teaching you all about buy side and sell side liquidity.